Property stocks at the local bourse were down early this week on news of a total ban on offshore gaming operations by the end of the year. Now, could the government's move, though, hurt the property market? Joining us more on this is David Leechiu. He's the CEO of Leechiu Property Consultants. Hi, David. Welcome to Market Edge. Good morning.
Hello. Good morning. Thank you. Thank you for having me on your show.
All right. Let's talk about Pogo property now. We've seen the property sector in general really taking a beating at the Philippine Stock Exchange following the president's pronouncement at his SONA outlawing Pogo. Now, the real estate counter dropped over 2% that day. But realistically, at least that's as far as investor sentiment is concerned. But realistically, how big an impact really would a ban have on the entire real estate sector for investors to react that way?
Yeah, I think there's a natural overreaction to, as far as the public stocks are concerned, because the exposure that each of these companies have is quite minimal. They're in the low single digits. So I think, at least for many of the publicly listed companies, they're fine. Where I think this the ban on the Pogo will have a big impact is on the individual investors, the secondary market investors in the residential space.
All right.
In particular in the middle end of the market, because they're the ones who are leasing a lot to Pogo and Pogo related tenants.
All right.
And I think the high end market should be okay. The low end market should be okay. It's really just the secondary market in the middle end.
I agree. That kind of impact of a Pogo ban does not just apply to, at least we're talking about just 3 to 4 companies directly invested in it. But the entire property sector, of course, you talk about properties that host businesses such as residential. You mentioned that already. You have tourism, which may feel some significant impact. Now, in the grand scheme of things, though, how are you seeing recovery from these secondary market sectors that you mentioned?
Yeah, I think the secondary market will have a tough time because the rents will come down by 50%. And it will take a longer time to get tenants, and most of them will be local tenants as against the foreign tenants. The other thing to consider is the office sector. The office sector will be hit quite hard, but thankfully the Pogo sector occupy about 1 million square meters, more or less. Maybe it's about 800,000 to 1 million square meters today. And most of those office landlords will take a long time to find tenants or replacement tenants. I'm talking about maybe two or 3 years.
Yeah.
And the concentration of this footprint is in the Bay Area, in Alabang, in some parts of Makati. But it's a question now of how quickly can these landlords adapt to that market so that they find tenants quickly. And the only way to do that is to, number one, upgrade the building, and number two, they've got to be realistic with rental expectations.
Okay, and correct me if I'm wrong, but for Leechiu Property Consultants, I would imagine you have exposure, some exposure at least, in the secondary market. What have you been hearing so far? Are you really feeling some kind of exodus from these properties that you handle?
I can tell you that the market is flooded with second-hand Alfards right now, and I think a lot of landlords are in panic because the secondary market in particular are anticipating that many of their tenants are going to be gone. The office landlords who are housing Pogos are now very concerned, and they're replanning their cash flows because many of these guys have debt. I don't think there's going to be any distress in the system because the exposure of the banking sector to Pogo-related landlords are limited, very limited compared to the rest of the portfolio. So I think where this really will have an effect is that number one, it will delay the equilibrium of supply and demand in the office sector by 1 year. So instead of having equilibrium in 2027, it will happen in 2028. And the other thing is the pace of development in Manila and in the provinces will significantly slow down, and that will have an impact on the construction sector because building owners who wanted to build buildings are now saying, oops, wait a minute, let's see what happens to the market first. So I think a lot of the developers who would have built buildings in the provinces, and especially in the provinces, will probably want to sit and wait for the next 6 to 12 months until things have more certainty in the market.
All right, David, you mentioned about a sizable dip in terms of property rates and even rental rates for a lot of these buildings hosted a secondary market for Pogos, but that could be a knee-jerk reaction as of now. When do you expect things to really normalize? I mean, for the industry to come to its senses and really take this squarely?
Yeah, I think for the office market in general, we should have seen a recovery in 2027, but I think it's going to happen in 2028.
Okay.
I have to stress that the office market in the Philippines is in a very good situation. Yes, vacancies are at 17-18% today overall throughout the country, but that is very manageable, and the demand numbers are fairly healthy. The problem with the Philippines is a supply problem, which is a very simple problem to solve, and that's solved by time. In just 2 or 3 years, we should achieve equilibrium. Now, we should have seen equilibrium in 2027. We're going to see that in 2028 instead. Where I think it will take longer will be in the residential mid-segment market, because right now, Pogos are paying maybe 40,000, 50,000 pesos per month for a unit, for a small unit, and now those have to come down by about 50%, maybe
50.
even more.
Okay,
By 50, yeah.
Slashed by half, really.
For rents, for the office rents. The capital values are probably more resilient. People will not sell at a loss. But what that means is that you will need to wait for 1 or 2 years to get your unit leased out, depending on where it is, of course.
All right. Now, David, we know that the ban takes effect at the end of the year, which means property owners have a few months really to think about how they will repurpose former Pogo real estate. What possibilities do you see for these properties now?
It's really just a waiting game. Okay. You can't repurpose these office buildings, or at least 90% of them you cannot repurpose. It's too expensive to repurpose. And even if you repurposed it, you still have very uncertain demand numbers. So it's just my advice to landlords is just sit and wait, because in time, those buildings will be leased out. And of course, the other advice we can give is, I hope if they're looking for a broker, they know who to call.
All right. And of course, this has a silver lining, really. I mean, some see a bit of hope in the Pogo ban. We've had reports saying that the easing of real estate prices as a result of this may also, provide an increase in terms of demand and affordability for at least for the residential market. How realistic is that assumption?
Well, I would disagree, because the rent, yes, okay, fine. The demand, the people on the demand side will be happy about it, but come on. I mean, prior to 2016-17, these prices were very depressed already. So we can say that the investors on the condo side had a 4-year boom, a very short-lived 4-year boom, and then after that, it's back to normal. And back to normal means that instead of getting 5-6% returns on your investment, you're only going to get 1 or 2% return, which is fine, again, for the consumers who want to lease cheap space. But I have to stress that the Philippines has been doing cheap rents, especially in the condo, already for decades.
Okay, David, what perspective can you give us from the property sector, given that a lot of these investments are really very volatile in terms of, for instance, you have Pogos, which is really under government regulation. It could be, it could be terminated in a few years. So what perspective can you give us about property investments in the very risky endeavors?
I always, in good times, everyone thinks that it's never going to end. And in bad times, everyone thinks the bad times will never end. And so I always quote Jack Ma. He says, "Today is bad, tomorrow will be worse, but the day after tomorrow will be sunshine." And I think we just have to, again, just sit and wait and also be very realistic. Because, okay, in the bad times, like in 2020, a lot of buyers could have bought really prime property at the few windows that sellers were realistic. But because they thought that things will go bad to worse, they kept negotiating downwards to the point where they missed very good opportunities. At the same time, in the good times, many people could have cashed out and gotten a windfall. But because they thought that good times will never end, they kept pushing prices up. So I would say in times of stress or boom, sobriety and moderation is always a healthy position. So take, and I'm sure the stock market investors would agree that when there's cash on the table, there's no downside to having cash on the table,
Okay, and speaking of more challenges, both in the supply and even the demand side, talking about the entire property industry now, you have one major challenge. This has been posing a challenge in the last 2 years. You have prohibitive borrowing rates, putting the brakes on post-pandemic expansion, and I'm talking about putting the brakes on both developers and even consumers, because interest rates for property has not gone down. How has the industry been dealing with the challenges associated with high borrowing rates in the past few years?
It has been incredible because despite, so this is what I tell people, okay? Despite COVID plus hyperinflation plus high interest rates, the prices and the property market in general has been very resilient, okay?
Okay.
Please, let us all take a moment to appreciate that, the public of the Philippines, because the office markets all around the world outside of India, Philippines, South Korea, Singapore, all of those office markets are being destroyed. Okay? By destroyed, meaning a lot of people are losing dramatic wealth. And apart from, let's say, the high-end U.S. housing market, most property markets in the U.S. are being destroyed right now. And you've got the credit card crisis happening in the U.S. All those things are destroying wealth right now in the U.S. and in China and in Japan and in Western Europe. Philippines, despite all the hardship, all the challenges, we have been very resilient. It's a testament to the high savings rate and the low debt levels in the Philippines, especially in the high-end market and especially in the private sector. And if you look at the government, yes, COVID drove us to borrow a lot of money, as did every country in the world, but it still is one of the lowest GDP to debt ratios in the world. So let us be thankful. But also, if you're a buyer and you're waiting for prices to fall, despite all of these challenges, I mean, what other disaster are you waiting for before you become reasonable with your bids on buying property? I mean, really, what kind of disaster do you want on the Filipino people? What more do you want? Despite COVID, hyperinflation, hyperinterest rates, calamities, are we waiting for even more disasters before you can say, wow, the price is good enough, let's go buy? No, So I think that is probably the most important thing, that we have to be thankful and we have to act accordingly. So, and that goes with, being thankful with for example, all the people that help you in your household, whether it's your helpers or drivers or staff. You just have to be very thankful and act appropriately.
Okay, that's quite an optimistic view, really, under very challenging times. David Leechiu, again, thank you so much for this conversation, for joining us this morning. Have a great day. Have a great weekend.
Thank you, and have a great day, everyone. Take care.